Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen, in the studio today with my usual sidekick, my buddy, my pal, my confidant, Tony Shore. How you doing, Tony?
Oh, Barb, I am happy to be here. That's how I'm doing. Uh,
Yes,
couldn't be better. We were talking baseball.
we
We
were.
could be doing better in baseball.
We
Uh,
could.
Both the Twins and the Royals. I'm glad you won your
Yes.
series. You had your Royals hat on earlier.
I did. I did. I
Yeah.
took it off because the hair's too big today, and I end up looking like a well known clown from the Chicago area in the
Oh no.
70s,
Oh no.
except it's not quite red enough.
No.
I
Yeah.
don't want to name him because I don't want to get hit with trademark infringement or anything like that because I
Yeah.
think it's still on,
Yeah.
which is weird to think of.
Sad to
But
think of.
yeah,
Really
well, and
scary.
and and we're recording. We're probably a couple of weeks ahead of schedule at this point because we have doubled up on a couple of recordings. I know
Oh,
we've
sure.
skipped some
Sure.
weeks, but
Sure.
this weekend the Chicago Cubs are coming to play the Kansas City Royals, and
And you're
as you know,
going.
I am. I am. Even though I am from the south side of Chicago, I am a Cubs fan. I'm going to duck a little when I say that because it
Yeah.
can be they're passionate about what side of town you live on and whether you should be a Cubs
Oh,
fan or a White Sox fan.
Oh, yeah, they take that stuff seriously. I don't take
Yes.
sides there. Uh,
No.
I'm a Cubs
No.
fan when it comes to Chicago. I used to root for the
Yes.
Cubs. I mean, we're in the same
How
division,
do you
so
not root for the Cubs? And I've been a
I
Cub I was a Cubs
I don't
fan
know.
before it was fashionable, before there were lights in Wrigley Field.
Yeah.
And I my mom will tell you I cried when I found out that they were
Oh,
putting lights in Wrigley Field. To me that was
oh,
like the ultimate sacrilege. Little bit top of the show housekeeping. You can follow us on your favorite streaming podcast or subscribe to our YouTube page. You can find us at BG Wealth Management on YouTube, or if you're a federal employee, follow us at Federal Retirement Coach. We have some other videos there that are tailored specifically to you, our federal employees, because you guys have questions about your benefits and things that are unique to your financial situation. So we address those directly on that page. Um, Now, I did get to have some fun this week. Yesterday, I was out on post at Fort Leavenworth
oh,
and got
wow.
to help with the Stronghold Food Pantry. They did a back to
Oh,
school drive for our
that's awesome.
service members who have kids. When you're in those lower ranks, money is not something that flows
No.
freely. So to have the opportunity to help them get school supplies, as well as every family got a grocery shopping bag full of essential toiletries, new toothbrushes, toothpaste, shampoo, lotion,
Wow.
you know, uh, body wash, all of that stuff. And they also got an extra bag of groceries with things for sack lunches and or breakfast to help take a little bit of pressure off of the grocery store bill. So that's how I spent my afternoon yesterday
Wow.
and love having the opportunity to go out there and serve.
Yeah, and give back. I know it feels good, doesn't it, to be a part of
It
something
does. It
bigger than
does.
yourself? I mean,
Yes.
that's really good.
We normally do a school supply drive for back to school, but with us relocating our office and all of the chaos with the changes and move dates with that, we just couldn't do that this year. So we were able to redirect those funds specifically to the Stronghold Food Pantry out on Fort Leavenworth
Mm.
and help with their school supply drive as well as their Hunger Buster program, where they provide students with a backpack full of food for the weekend when they don't have that school
Oh,
breakfast and school lunch to help
wow.
deal with groceries. So,
That's awesome.
yes, and a tremendous privilege to be able to serve that way
Yeah,
and
that's great.
to help with that. I like it when we can go directly to an organization where no military pun intended, it's boots on the ground doing the work. And I know that we're not
Yeah,
paying an administrative salary, we're
right.
actually helping the people in need.
Right. And you're giving a hand up, not a handout. You're actually helping the actual people in need. And what a
Right.
great cause, too.
Yeah.
I mean,
Well,
what a great thing. It's a
Exactly.
need. You're filling an actual need. That also makes it even more worth it.
And to
So,
give back to those who are sacrificing to serve our country
yep.
is one of the greatest privileges that we have.
Yep. And I know you have a real passion for government employees, federal employees, and our military, and
Hmm.
giving back is so important. Barb, I really admire that. That you do spend a lot of time, a lot of effort, and a lot of money, you and your company,
Hmm.
in helping giving back to the community. So it's always a priority here. It sounds like that it was a great event. It went well.
Well,
That's
and
awesome.
both of my employees have partners who either served active duty or who are in the reserves now. So,
Yeah. And
you
look at
know,
the karma. You got free tickets. You got offered free tickets to the Cubs game, and you got great seats
we do have fabulous seats for tomorrow night. I'm
right
very
behind home
excited about
plate. That's
that.
awesome.
Yeah, well, a
Yeah.
few rows back. So,
Yeah. A few rows back. But
far enough back
you
that I
can
don't
always
have to
lean
be
up
on
and
camera.
say you can always lean up and say hi to your buddy Patrick Mahomes while you're there.
He's at training camp this week. I
Oh,
don't
that's true.
think
He
we'll
won't be
see
at a
him.
baseball game. No.
Um,
That's true. They're in training camp. That's
yeah.
full swing right now.
Now, I
Yeah.
am close enough to be able to hear the crack of the bat and the call of the umpire,
Oh
and
yeah.
far enough away that if I'm accidentally rubbing my nose, I won't be on camera. So,
Yeah, but you're close enough to yell at the umpire and have him hear you.
um,
Hey
potentially.
ump, you need glasses. I like that one. Uh, hey
Well,
ump, take the blinders off.
I
Come
try to
on.
be nice. I try to
I
be
always yell,
nice.
come on, ump.
All
Yeah.
right. Enough about the fun stuff. Let's talk about what's going on in the market and if it's time to lock in some of these profits that we've seen and
Yeah.
maybe time to rebalance and go a little bit more conservative.
Yeah. Preserve the profit. What do you mean?
Okay, well, my disclaimer at the top of the show is I am an advisor. I am not your advisor. And even if I
You
am
should
your
be.
advisor and you're listening to this podcast, I want you to talk to me before you make any changes in any of your accounts that we are not helping you manage
Sure,
directly.
because everybody's situation is different.
They are, and everybody's circumstances are different. I give completely different advice to the 35-year-old that I do to the 65-year-old,
Well, sure.
depending on what
Yeah.
their time horizon is and what we're
Yeah.
looking at with everything.
Yeah.
We have seen some crazy movement in the market in the last 10 days or so.
Yeah, it has been.
You know, we saw a huge pullback and correction after the Fed decided to hold interest rates steady.
Yeah.
And then we saw a jump on Monday on the speculation of yet more peace talks in Iran. We saw an even bigger jump on Tuesday. On Tuesday, I think the S&P closed up something like 1.8% for the day.
Yeah.
And then we had a couple of pretty flat days, which were to be expected after going up 2.5, close to 3% in 2 days, which basically we regained everything that we gave back in the correction the week before, because the week before we ended up dropping like 1.5% on
Right.
the S&P in one day. And today we are back up again because the jobs report came in. We were expecting to gain about 80,000 jobs. And instead, the preliminary report says that we lost 23,000 jobs or
Mm.
thereabouts. Now, these reports get revised all the time. They get
Yeah.
revised every month.
Yep.
But they never trigger headlines when those revised reports come out. Did you
Right.
ever notice that?
Yeah.
Yeah.
Isn't that
So,
funny?
right.
Yeah.
So we are again up a little bit more aggressively than one would normally think. For those of you watching the video on YouTube, I'm checking my phone. It looks like we've cooled off a little bit, but we're still up almost 0.4% on the
Hmm.
S&P 500 for the day.
Interesting.
We're around the middle of the day. I
Yeah.
don't know that that's going to hold. I don't know that there isn't going to be some sort of crazy headline.
But you
But
can't look at this on a unnecessarily on a daily basis because even like you say, within a day it can go way up and way down.
right, right. But we have had 3 years of double digit returns.
Yeah.
We are in double digit returns for the fourth year in a row.
Yeah, so far.
And and I mean, like, the first 3 years have been significant double digit returns, not just 10%, but north of 15%.
Sure.
So my question is, how long can the market sustain this kind of growth? Because we also have inflation numbers that are not backing down
Yeah.
like we expected them to. In fact, with the conflict in the Middle East and the bottlenecking of um, not
Hmm.
only oil,
Yeah.
but things that we need to make things like fertilizer. So it's going to be affecting our food chain and our food supply even more so than it already has.
Yeah.
You
Yeah.
know,
The
we,
farmers are very concerned about all of this, and it's already
yes.
affected that. Yeah.
And let's not forget that the conflict in Ukraine has already put a bit of a stranglehold on the world's food supply because
Yeah.
Ukraine is one of the largest grain exporters in the
Yeah.
world, and
Yeah.
their
Grain has been
exports
an
have been
issue.
way down.
Yeah. Grain has been an issue, and it's
So,
becoming a bigger issue. So
and
Barb, what you're saying is maybe lock in some gains, and I think
right,
also when it comes to what the markets are going to do, eventually, if inflation numbers continue to rise and the job growth isn't what they want it to be, people are saying in September the Fed might raise interest rates.
possibly, I think,
And if that happens, that will affect the market too. The market usually takes a dip. So
right.
that you might want to consider, depending on your situation, locking in gains and preserving the profits. Because, even though we've had a record market, is what you're
Mhm.
saying, Barb, the fact that we've had record markets the last three, now going on 4 years, you don't get those gains unless you lock them in or readjust, right?
Exactly. Right now, everything that you see in terms of growth is on paper. And it's only when you sell. Now, if we're dealing with money that isn't in an IRA or in a 401k, if we're dealing with an after tax brokerage account, we could be triggering capital gains if you make that sale. So, again, you need to talk to your advisor. You need to talk to your tax professional before you make any kinds of changes in your accounts to look at what the long term repercussions are of your actions now.
Sure.
Okay.
That makes sense.
But, since we have had a lot of unprecedented growth, some people think it's an unsubstantiated growth. I don't necessarily know that that's the case, and I don't want to dig into those economic weeds
Sure.
today.
Earnings have been great. These companies have
Earnings
been doing great.
earnings have been great.
And that's
And
what it's been based on. So
right, but at the consumer level, consumer debt is also increasing.
it's
So,
increasing greatly. And it's a
yes.
consumer driven economy. That's a great point.
So, while we're looking at all of this and saying prices have gone up, but I haven't changed my lifestyle, there's only so much you can borrow to maintain your lifestyle
Yeah.
before it's going to be time to pay the piper.
Yep.
And if the Fed ends up taking interest rates up instead of taking them down like they had talked about doing earlier this year, then that money that you've borrowed just got more expensive, especially if it's through something that's got a variable rate like a credit card.
Yikes. Yeah.
It might be time to revisit everything, including your spending, how much debt you've gone into, and the growth in your accounts. I'm somebody who has benefited greatly from the markets going up. My 401k looks a lot better than it did.
Sure.
Lots of people's 401ks look better than it did. So, what can we do to preserve and lock in part of that gain? Because we are going to have a pullback in the market. I don't know when, I don't know how severely. But everybody right now is acting like they don't remember 2022 when we had a 20% decline in the S&P 500. It happens. I don't want to see you anticipating that the market is going to continue to go up the way it has,
Right.
and try to build a retirement lifestyle or a spending plan around needing those double digit returns to maintain your lifestyle.
Smart. Yeah, you can't do that, and you can't put all your eggs in one basket. So,
No.
especially as you get older or closer to retirement, you've got to start, like you said, is it time to preserve the profit? Where should that money be living? Should it all be attached to the market? Probably not.
No.
It depends on your time horizon, and but even with a longer time horizon, you want some money in
Mhm.
safety, right?
Yes, you do. And whether that is through a buffered index, a structured note of some sort, or having it completely out of the market and in another type of tool where we
Sure.
have some more measured growth that's not aggressive as what we've seen in the market,
Sure.
or whether it is maybe taking a little profit out of that brokerage account and paying down the credit cards and getting out of debt
Yes.
so that when there is this correction, or if you do unexpectedly lose your job when we have a pullback in the economy, that you are in a better financial position to weather that out.
Yeah.
And, you
Yeah.
know, you always want to make sure that you have that emergency fund. Statistically, most of the people listening to this podcast couldn't handle $1,000 emergency without going into debt of some sort.
That's not good. You've got to
No.
have more of an emergency fund built up. You have to have all the ducks in a row, and that's what you go through with people. You look at emergency fund, you look at debt or credit card debt, you look at um what they have in their accounts, their
Hmm.
employer sponsored, tax deferred retirement
Yes.
accounts, what's attached to the market, where the growth is at. And everybody's situation is different. I mean, nobody has a crystal ball.
It is, which is why I can't sit here and hand out cookie cutter numbers and say, this is how much, the only cookie cutter I'm going to say is that if you don't have at least $1,000 sitting in a savings account, that needs to be your first goal. That's
Yes.
probably the one thing that you are going to hear me agree with another well known financial radio broadcaster who I normally lock horns with. But,
Yeah. Yeah, you and
you
me
know,
both. But yeah,
yeah.
that's is yeah, I mean, obviously, emergency fund is probably first and foremost.
Hmm.
Um, and then credit card debt, eliminating credit card debt. Those have to come first.
They do.
Then you look at investments. Then you look
Right.
at yeah.
Well, and unlike that person that we hear on the radio, I don't think you should stop contributing to a retirement account. I think
No.
you should contribute to the company match
Yeah. Yeah, you
at
see people
least.
make a big mistake because they believe all debt is bad. So instead of putting money into their retirement account, they're like, I got to first pay off my mortgage. Well, they might have a 3% mortgage
Right.
and they're taking money out of their retirement or keeping it away from retirement. So they're missing compounding interest that, on average, especially the last few years, but I mean, over time, has
Well, and
been
even over time, the
pretty
S&P
large.
500 returns come out annually somewhere between 9 and 10%.
Right. And
So
that's
if you
and past performance doesn't necessarily
no,
indicate future results, but we do have 100 years of data on the market to look at. And
right.
those are the facts. If you look at the market, it starts here and then now it's here. Now there's been dips in there, but
There
over
have
time the
been.
average is roughly 10%. So you've got to say, okay, even if you're conservative and say I'm going to average 6%, you got a 3% mortgage, you're crazy. You got to use the bank's money. There's good debt and bad
Right.
debt. And
Right.
good debt is when you can use the bank's money and keep yours. You earn interest on yours.
Mhm.
Barb, I love the what I love to say, and I didn't understand that. I had a hard time when I was younger, and in my 20s and 30s and 40s, even. Um, I used to I used to not get it because I would read an article and it would say Apple is going to expand or
Mhm.
build a new data center or build a new server farm, and they got a loan of, and I'm like, wait a minute, wait a minute, wait a minute. And then I'll look up what are Apple's corporate, profits, or
Mhm.
what's their surplus.
Yeah.
They have
What's the
billions
cash
and
they have sitting
they
around?
have
Yeah.
they have billions and billions and billions of dollars in surplus and cash, but they took a loan out from a bank or an investor to build something. Why would they take a loan out and pay interest if they have the money? Because they're using the bank's money, and if they get a good enough rate, they're
Right.
going to use the bank's money at 4% because they're making 10% on their money over here. And people
Right.
don't understand, if Apple, who has all this money, is doing it, you've got to think, why do they do that? Why does a
Mhm.
rich person, why would Warren Buffett ever take out a loan? And he would tell you, if I can get a low enough interest rate, I'll use the bank's money every time rather than my own. I'll leave my
Right.
own invested, right?
That's funny. I was just thinking about that. I was going to bring that up if you didn't. So, but this is why we tell people don't go it alone.
Yeah.
And this is why we tell people that, you know, you benefit from working with a fiduciary financial advisor. Maybe not necessarily from working with a broker, but when you are working with a fiduciary who is independent and who has the credentials to help you build an actual plan and not just say, I think you should buy this mutual fund because I'll get this much commission on it. Then, when my clients, I envision myself partnering with my clients so that we can work through all of the different stages of life. It is not a transactional situation for
Mm.
us. And that is why we are careful about who we bring on as clients.
Yeah. Makes sense. Yeah. So for our listeners out there, Barb, if they're wondering, okay, I've got all this money in an IRA and a
Mhm.
401k, what should I be doing? Uh, you shouldn't just set it and forget it. You should look at where you're at,
Right.
have different buckets of money. You have to have a plan, especially as you get older. Um,
Yes. And
yeah,
even as you're younger, you should be retaking some sort of risk tolerance assessment every 3 or so years.
sure.
And then as you're getting closer to retirement, we might even repeat those a little bit more frequently.
Yeah, like once a year.
And there are things that need to be reevaluated if you have been single and get married, or
Major life events,
yes, or
deaths,
if
births, marriages, divorces,
yes,
right?
yes, all of those things are going to impact your tolerance for risk
Hmm.
and what makes the most sense for you and how we should be allocating your accounts and
Yeah,
your investments.
yeah,
So,
exactly.
and anybody wanting to do that or to get a second look can always go to our website, bgwealthmanagement.com. And there is a button at the upper right about scheduling a consultation. You can do it that way, or you can do it the old fashioned way. Give us a call at our office, area code 913-553-6222. And Christina in our office will get you on the calendar. We'll bring in and we will take you through all of the steps and take you through our process so that you understand the lay of the land. And instead of just having a bunch of money sitting around, you know how that money is going to work for you.
Yeah, there you go. I think that's fantastic. Well, Barb, great show today. A lot to think about.
Yeah.
And I'm sure our listeners have questions. You should probably also be getting a second opinion on where they're at, or at least a
Yes, I
first,
agree with that. Yeah. Oh, yeah.
and
A
have
lot
a
of people
written
haven't
plan.
gotten the first. Yeah.
Yeah,
And
yeah, and have a written plan. A 401k, an IRA, those aren't retirement plans.
no.
Those aren't your full investment. That shouldn't be your full investment
Well, it's not a
picture.
financial plan, and it
No.
shouldn't be your full investment picture. People that come to our office actually get a binder or a spiral bound plan where they understand what we're planning to do and how we're going to get there.
Yeah, there you go. I think that's fantastic. So that number again is 913 553-6222. Give Barb and her team there at BG Wealth a call. I think that's great, Barb. You're offering a no charge, no obligation consultation.
Yep, that's what we do.
All right.
It's, I've always operated from the philosophy that everybody is entitled to information.
Yeah, there you go. And that's why we do the show. You love to educate people on
I do.
finances, what they need to be thinking about. So this is fantastic. Thanks, Barb, for a great show. Listeners and viewers, thanks for tuning in. That does it for today's episode of Anchor Your Retirement with our host, Barbara Goen.
We'll see you soon.